What's going on, traders? Hope everybody's having a great weekend. Wanted to do a little recap and some analysis for the upcoming week on the S&P E-mini futures as well as the Nasdaq 100. Of course, we're going to look and formulate plans for both sides of the market, starting off with some higher time frames and then breaking it all the way down and getting a little bit more granular on the hourly. Of course, we're going to look at the economic calendar as well to start off the video to see if there are any data points that we want to be aware of this week, and it looks like we have a few. Of course, this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. So, let's start off here. Let's look at the economic calendar, and then we'll get into the charts. All right, what do we have in store this week? October is now in full swing, spooky season. So what do we have? Non-farm payroll last week came out better than expected. Market really did enjoy the numbers. I think that is encouraging data for the Fed. However, we do have to keep in mind, I think that a lot of seasonality hiring is going to be taking place starting within the next couple of months into the end of the year. So we have to see how much of that is really inflating these numbers. Only time will tell. All right, so what do we have this week ahead of us? Well, it looks like we still have some Feds speak that we have to be aware of. Monday at 1 o'clock, we've got Bowman speaking, and then at 6:30, we have another Fed speaker from St. Louis going, but that market is closed, so that's no big deal. Tuesday, 3 o'clock, we have Adriana Krugler speaking in Europe. Okay, not so, actually 3 in the morning, so don't worry about that unless you're trading London, potentially. But for the New York session, we do have Bostic speaking at 12:45. Bostic again speaks at 8 o'clock on Wednesday before the market opens. Lori Logan at 9:15, the Dallas Fed president there. And we have Goolsbee speaking at, what is this, 10:30. And we have Philip Jefferson, vice chair, speaking at 12:30. And FOMC minutes at 2 o'clock. And then to close out the day, market will be closed, but San Francisco Fed President Daly speaks then after the market is closed. But here's really the big day. Thursday, October 10th, we have CPI coming in as well as initial jobless claims at 8:30. That is the big data point that everybody will be watching this week. Lisa Cook speaks at 9:15. Barkin starts barking at 10:30. New York Fed President John Williams at 11. So tons of Fed speak looking like we are in store for. Friday, we have core PPI coming out 8:30. Definitely be paying attention to that. Second most important data point this week. Goolsbee speaking again at 9:45. Consumer sentiment, Michigan at 10 o'clock. Lori Logan speaking at 10:45. And then Bowman speaking at 1:10. So very interesting week ahead. All eyes are going to be on CPI and PPI, though, so that is really the most important. I would say Wednesday would be a good day just to be a little bit cautious with your sizing. Market may be a little hesitant coming into major data release, so size down and be careful, especially on Wednesday. All right, let's get into some charts here and start off with the weekly chart like we normally do. Still, obviously, in an uptrend, but momentum still seeming to stall to me. We really have not broken out of this balance range that we have been watching for the last few weeks. So really, not much has changed also in the sense that we're not going to see the move, right, until we get a clean break of structure either to the upside or downside out of this balance range. We've had quite the rally over the last since May, really. We did have a drop in August, but overall, it's just been an uptrend. So, it doesn't really surprise me here that we're starting to kind of stall out, we have to definitely watch to see if this could potentially turn into some distribution setting up here, or are we just building up that spring for the next move higher? It is anybody's guess, but we can definitely use the price action ahead to be able to figure out what the market is telling us, right? So you have a clear defined structure now, and we really just have to wait for that break for the bigger move. I thought, to be honest, that NFP was going to be the catalyst that would take the week higher or lower, but unfortunately we really did not get that. So as all things said and equal here, the one encouraging thing I will say is when we came into the bottom of the balance zone, and you can see the retest of this prior structure right here, we just came back and retested that and found a bid. So that was exactly what the bulls needed to do, holding over the week high of the July 15th. So, we came in a little bit, but ultimately we closed up and above. So I think that that is an encouraging sign, although you can see the size of the candles definitely are smaller now, and we're not getting these big moves like this, even though VIX is currently elevated. And I do believe we did see some 20 prints this week once again. So volatility is back in full swing, even though we are not really falling too much. So I think that that is interesting to note. Okay, let's break it down. We're going to go back to our original chart that we have been using. No need to draw a new one for the new month. Oh, you know what? I did want to take a quick peek at last month's candle. And certainly you could see the buyers here just not accepting, or excuse me, the bears not able to find acceptance in the lower part of the monthly range and just pushed us right back up. Pretty strong body, but I do not like seeing this type of a wick here. I mean, this one would make me a little bit more nervous, but coming down, being pushed back up is encouraging, but we're not making a new higher high, and that is what is a little bit concerning. We have been looking at this monthly overbought signal we've been getting on our Hello Momo for quite a while now, and it's only going to be a matter of time before this really starts to peel off. Again, timing it is nearly impossible. I'm going to make the guess that in January into the first quarter, we might start to see some of this actually taper off. But up until then, I still think that it is mostly by the dip mode, but we definitely have to keep an eye on this. You can see even back here how long we stayed up, almost 7 months, right? Because here's 2021, 7 months before it just started. And even when we started to see the divergence here come in and the weakness come in, we really didn't see it take hold until about April, right? About March or April, and that's when we had that big downturn for a while, a couple of years back. So, this will take time to play out. Let's see how long it takes. That's anybody's guess, but we're definitely going to be watching it because it's only so long that this is going to last. It's not a reason to, one data point alone is not enough to take a short, but it's certainly something on the higher time frames that we want to be cognizant of. And remember, we always talk about those higher time frames give us the biggest reactions, right? And we're looking at a monthly now, so that is certainly very interesting to watch. I wonder, of course, we got some contract rolls and stuff. Yeah, but do we see 5,000 again? That wouldn't surprise me. Well, of course, I'm just, it's a fly-by-night prediction, but. And of course, by the time that happens, we'll already be in 2 or 3 contract rolls. So who knows what the futures contract price will actually be at the time. But let's just remember these highs from back in October here from 2022. Hopefully I remember if we ever get there. Okay. Let's get on our daily chart here and take a look at our zones. All right, daily cooling off a little bit. Oh, I meant to look at the weekly just to see our readings there on our overbought, oversold. I think we are fine there for more upside. Yeah, starting to peak a little bit back up into the spicy area, but not too concerning there. Okay, just wanted to look at that. All right, here we are on our daily chart for the E-mini S&Ps. And let's zoom in. So you can see the bulls, and I was mentioning this on the weekly chart. You can see here, this was the break of structure, right? We couldn't get over, had that reaction, finally got over. So this right here is what shifted the market structure. And now, boom, you can see here, we're just trapped, right? So again, if you're looking for the bigger move, be careful. We're looking at the daily time frame here. So bottom of the range down to that 47 or 50, 57.44 area, all the way up to 5,800. Yeah, it's still a very tradable balance, but we just have to be aware of the unlikelihood of a true trend day until we actually see a real push up over. Did form a little bit of a weak high here coming up. I'm going to mark that off right up at that 58.30, but you can see in the previous days, the 27th, 30th, and the first of the month, all look above and fails. We were talking about this. I posted about this on my Twitter, looking at this overhead inventory that had been created here, and talked about potentially riding back down underneath the 57.70, what did I say, 57.60, I believe, for that downside move. We did actually get that, and we came right into, again, that previous shift in the structure right here in the 57.32, excuse me, the 20s, excuse me. You can see we hit that area twice. Perfect double bottom, and then a big counter trend reaction move. Once we got over our EQ, it just went straight back and traverse the whole direction. So from the daily perspective, gotta stay, for me, bullish pretty much if we're still over the 57.70, I'm going to say 57.75, holding over the highs from back in July 15th. Very clear right there. The low, also the 26th. So as long as we're holding up here, I can assume this is bullish consolidation, looking for the power to be built up here for that possible push. But what we really need to see, again, is that close. We need to see daily closes over 58, 05 I'll even accept, 07 better, anything like this. Okay, then we can go ahead and attack that week high up at the 58.30 area. But until then, you can't even trust these moves, right? So, even if you want to mark off the 20s, if you were looking at a short position or short trade, for example, if, a starter position up at the 58.10 with the ability to add up into the 20s, of course, out over the swing high or the week high. But we've seen this now 3 times, and when I was posting about this, you have to assume that now this has created that overhead supply inventory, and it may be a little bit tricky for the bulls to get over. I will say, though, this was a failure to break lower, and that is definitely encouraging for the bull side. So let's see if we do get some consolidation. Maybe CPI is going to be something that drives us up and over, although I have mentioned in previous videos, I don't know how much the market is that looking at inflation, more so looking at the jobs numbers recently. But of course, this is a whole ecosystem, and you can't have one thing without the other. The intermarket and the intermacro data points all work together, so you can't really discount one truly. But the inflation talk's definitely a little bit more on the not as prevalent right now. If anything, I think we should be more worried about the potential of stagflation, but we will see. Okay, so that's pretty much everything I wanted to go over on the daily chart, because not really that much has changed. And when we go over the daily levels here, our day trading levels on the hourly, again, it's really the same levels that we have been watching. So let's go over that quickly and see what we can take away from the moves we have seen. All right, so still in the same range. You can see here when we were coming down, this is that daily level right here in the 20s. Plenty of look belows and fails, right? Look below, came back, recaptured, look below, recaptured. Definitely a bullish sign there. So here is obviously too where you were looking at potentially being long around those 30s, and they're just stopping you out, running your liquidity, and then going in their intended direction. So obviously be aware of that. However, if you had done the prep for from the daily perspective and understood these levels down here, that this was just really a big daily zone, then you knew you had some room to work on that trade. Anyway, so where are we right now? Well, we're kind of trapped, right? I do think that this is great. We did shift again the structure in the market. This is annoying me, so I have to extend this. Pardon me. Okay. So we did shift a major part of the structure here, which is good, and it's a little messy to see here. So I'm going to throw it up here just to make it a little bit easier. Just you can see this concept, right? And, well, it's not quite right. There we go. It's a little better. I'm just doing this. It's not going to be 100% perfect, but just so you get the idea. Okay, so here we were in the box. Trap, 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 trap. Okay, finally, we now have pushed out, right? So now that this area here, because we couldn't get over here, you can see reject, reject, reject. Here, look above and fail. Now that we've moved over, this is shifted. This is our new zone we want to pay attention to. Any pullbacks really up into this area here, 57.75, we've already talked about that area, and you can give it some leeway. I get a little bit uncomfortable underneath 57.70 because we're starting to get back under, but you still have this area here. So, and you can see bulls did come in here. Got a little tricky here in the morning, but last stop would definitely be 57.65 for me. I really don't like it under 57.70. Everyone's got a different risk tolerance, but that's just for me. But 57.75, we already talked about that a little bit earlier on the daily chart. So, and you can see now it's all fractal, right? Right? So you can see that here as well. So, now, what are we going to see? When I pull out these levels, I really wouldn't be surprised if we're going to see one of my day trading levels that we already made up right here. And it's also kind of it doesn't surprise me. It shouldn't surprise you right here where we're stopping, right? Almost 50% our EQ and lining up perfectly with our 5,800 whole number resistance here. A couple of look above and fails, can make it a little tricky. They never make it easy, but you can see here, of course, if we pull back down into the 70s, you got to be a buyer. I think, retest coming in here, being the buyer and looking for this to come back up and hopefully break up over that 5,800 to get to the high of the range. But let's pull up our levels here. I just really wanted to show that structure where we were stuck. Then we came back and retested because I think that was important as far as structure is concerned here. So we're coming back into our day trading. Nope, this is from the daily chart. Here we go. Okay, so as I was saying, right here, 5,800, we do have the level pretty much right here. Okay, the most bullish thing, although I'm not really interested in a trade like this, but the most bullish thing, sure, if we hang out over 57.90, we could say 57.93. Sure, we're maybe building up a little hourly flag here for the break over 5,800. I really would love to see a 30-minute acceptance over that, though, to really feel a little bit better. Certainly over 58.08, I think we'd be free and clear up into 58.15, 58.20, right up in this zone. So that's what I'll be looking for, the bull side. Right here, we've talked already about this is maybe the first pullback you could potentially consider. You can see right here, boom, 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 right? So if we did break under I would say that 57.91 had some acceptance. We could come back into the 57.85 area, 82. First area you could consider a potential long trade, in my opinion. Price breaks here. Or you can look for the short if it comes up, retest, come back up, and depending on your style, how much you want to engage in the market, then you could potentially look to cover for that long trade, or look to see if you do get the break all the way down. I'm a little bit more interested in seeing if that would break and come back. Tons of liquidity still sitting in this area because this is where the structure did break. So it really would not surprise me that we'd want to come back, retest it. I mean, they already did it a little bit here. So, but I think it still has the potential to come back into the 70s there. I'd be much more interested in that long versus the long in the 57.80s, but it is definitely an area and worth a shot. I do believe, so. Or you could just look at the short side. It really wouldn't surprise me that we would break this, especially if we failed this. Another look above and fail, it really wouldn't surprise me that this wouldn't hold and they would drive it all the way down. Under that 57.70 though, watch out, back down into the 62. That would be the worst scenario, just in the sense that now we're back in this prior box, this prior area of structure consolidation, and then we could be very much in for a more choppy price action. And this was just kind of miserable to trade right here. I mean, this is just, look at this, it's just kind of gross, doesn't go anywhere, and just you got to be really hit it and quit it, and it's just not fun price action to really to be involved with. So that would be the worst case scenario from that perspective. Great if you're short from up higher, but bad just from that viewpoint. Under that 57.54 area, look down back towards that 57.55, and then we'll just trade back again. Hello, we've been there before, back into this old area of demand. But I must say that if we do really break under the 20s and start to break, now that's going to give you the trend. That's going to give you at least the downtrend day that you potentially would be looking for, right? It would have to be this break right here, pretty much under 57.05. I mean, even then you've got 5,700, but I think that since if we did break that, since this is such a big daily area, this is a huge market structure shift. If we broke it, we would probably just collapse all the way down. We'll get like a 40-point ES down day. Right, and the same thing could be said again if we break over, if we finally get over this high, if we finally build up some power here, and then we make that big move. Where could we go if we got a trend day? I mean, maybe we could rally about over 58.30. Maybe that would give us a push to maybe I would say 58.70. Maybe a 50-point up day, something like that. So about 50 points maybe thereabouts in either direction, potentially, for a trend day if we finally see a break out of this range. So be ready for it, because it will happen. When? That's the million-dollar question. Okay, let's get into the NQ, the NASDAQ 100. Take a look at our daily chart, or let's take a look at our blank chart. No. Oh, this was something I did. Oh, let's go to the other one. Okay. Still noting the divergence here on the tech sector versus ES. Tech sector way closer to its all-time highs. But much, much bigger range here. And you can see, though, this is a little bit of the concern. you can kind of, I'm a little bit worried about this getting a bit rounded like this. Have to watch for it because it's still, this low is just a little bit lower than, you could still make a flag type of argument, but it's the same situation in this fact that we're just in this weekly balance. And we've got this weekly balance, but really, if you want to be even bigger with it, you know, we're trapped here. So it is certainly getting tight, and eventually one of these bigger ones are gonna go. But for right now, all we got to deal with is this weekly range. So definitely make sure we've got the weekly high and the last previous week's low mapped out for us. That definitely can give us some weekly context here on whether or not we are above or below either of these levels for a potential bigger move here. We were talking about in the ES the potential supply overhead still being there, and you can see here from the week of the 23rd, got still this huge wick here, so gotta be careful. Big zone here where there still may be sellers looking to exit a late position and trapped overhead. So if we do come up into here, it could still be a battle all the way up into that previous week high, right around 20,540 thereabouts. So definitely pay attention to that. All right, I'm going to come over to this weekly chart here and get this off. Can certainly make this. A lot of the tech, some of the tech names I know, NVIDIA looks like this as well. So you certainly have this potentiality as we come into this downtrend here. So I'll pay attention to that as well. Let's see if there are actually any, what do our weekly uptrends look like? Okay. Coming right into an interesting spot there. Okay, so so we're still trapped here. And you know what? Let's do this one. Let's do a new one here. Okay, so you can see right here, this previous structure, sideways, 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 rest, 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 run, 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 rest, 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 came back and retested. So we're going to mark off our highs here from this balance. If it will do it. Where's my water? Okay, boom. There we go. And you can see really here, 2 points of this structure, right? Structure here, structure here. Okay, so that's looking pretty good. So, but what needs to happen for the bulls? Well, really, we talked about this before, and this was the high from the 26th. This structure here. Right, so although yes, there's long trades and long trades and short trades intraday, always, but bigger picture, We gotta get it. The bulls need over that 20K 540 area. We just were talking about it. We'll throw it up there. Boom. And when we were looking at the weekly, the wick area, when I was pushing, looking at that supply area, this is that area right here. When I was showing those wicks. Right. So from the daily perspective, this is all you really need to know, right? We're either going to break below, and you could even say 20 points. I mean, the low here was 19,820, but we could say 800, just do the figure. Under 19,800, well, then we'll look to trade back into this prior structure balance, and we'll look for potentially moves down. I think we can get into the mid 600s. Maybe a little bit up higher. This doesn't look quite right. You know, it's hard to, you know, you're always going to be a point or two or 5 off on NQ. Right, so maybe 19, 670, 80, 60, somewhere in that zone. We start breaking under that, though. Look for the traverse all the way down to 500, 515. I think to be able to come up and retest up into that 20K, 540, got to get over these highs right here. From August 22nd. We tried on Friday. We really tried. So let's look for, let me draw this out. So over 20K, 20,000, 260. Right. I think that can give us, I mean, even then, that probably can get us up to 335. You know, we have to be cognizant of the high from the start of the month. So I'll still mark that off. But I think that over that 260, we could get driven into that area. Up and over that, then we can start talking. Then probably we'll head into that 20K 400, the figure there. So I think that these are, at least for me, the big daily key levels that I'll be watching, because I know that we need to break over these bigger levels to get any type of trend going. So that's one way you could look at it. Certainly. Got the weekly range right here. Another way we can look at it as well. If we stay contained here within this weekly range, well, then we can balance structure that out as well. So it can say, from the daily perspective, above basically 75, can still be looking bullish up for the moves up into the higher 200s, 300s. This would be the most bullish thing from that daily point of view. Hang out here, and then we can make that push, and then maybe we make that push and then target this prior week high. Not week, but like week is in WEA. Okay. That's not what I wanted. right? So that's what I would figure would happen if we get over 400. Yeah, we could go to 550 there in that area. All right. So, it's anybody's ball game. Let's get into some day trading levels here for the Nasty Nas. All right. Trapped. I would say anywhere between, okay, I'm not saying 20K anymore. So, anywhere between 235 and 147 here. Probably bullish consolidation, but definitely tradable. But you got to understand that that's what's going on. Have to get over and see acceptance over 235, 240, and even up in the 260s, still a little bit vulnerable. But we start seeing 30-minute close over that, I'll feel a little bit better for us to go ahead and attack that 300. Still a bit of an issue up into the 230s, so I have to be aware of that right there. But if we certainly get over, I'm going to say 330, then I would think we are free and clear for 400, maybe 420, thereabouts. We might get stuffed, right? And they might front run it like they did here, and we get stuck right at like 399. But ultimately, right around that area, 400, 399, it's pretty damn close. So that's what I'll be looking for. If we do start to break under 145, well, then watch out. We'll probably trade back in and down, but right around the figure, right around 100, that's the area where we did shift structure, just like in ES. So you gotta watch this zone here. If we do break, we may come back in, but this might be the long area. I would much rather hold over 150, or excuse me, 145, but we have to be aware, again, this structure. So even the longs up into the figure there, and maybe about 25 points down, around 75, is all kind of a long zone tilt as well. Breaking, though, under that, watch out. They'll probably come down into that 25. We break under 25, and we break under the 20K figure, then watch out. We'll probably sell back down to the bottom of that weekly range, right around that 19,900 area. So that's pretty much what I'll be looking for there. But we have to be aware, again, it's definitely tradable, but bigger picture, we're stuck. So just be aware of that, and it's not going to be, we're not going to get that huge 200-point trend day, 300, until something really changes. But bulls are doing what they needed to do, breaking over this area here. I think that this is good. This is constructive. Just as long as we don't start to trade back down and under, then I think we can still anticipate some further upside. We just made a higher high here, shifted the structure. So what would you really have to think? I don't know if it's going to be Monday. Monday's usually more rangy, but I would say maybe even Tuesday, turn around Tuesday, we get a little bit of that retracement into that break, into that prior shift, and then we start to head up into the end of the week. Of course, we do have data on Thursday, so that is also something to be aware of and might slow this down. So we've pretty much got our zones here. Let's see what we get this week. Monday and Tuesday this week were pretty interesting. I really thought NFP, like I said, was going to get us out of this dang range, but no. Let me extend this. Okay, well, yeah, I think that's pretty much everything I wanted to go over for looking at the NASDAQ day trading levels. Just be careful, again, if we're back into this area here, you can just see this can be really miserable to trade, and you can get chopped up trying to hold for breaks. So just be aware if we start getting back into this zone in the mid, well, basically in the 40s, 50s, 60s, and certainly down into the 940s, it can be a real nightmare. So just be very tactical and careful, or just sit on your hands and do nothing if we're back into this area and wait for the bigger move. You know, everybody has their strengths and weaknesses. Some people are better at trading at chop, some people aren't. They like the trend days. Know your strengths and weaknesses, and when you're not seeing a day that's giving you favorable price action, that you find your edge to be the most what's the word I'm looking for? The most effective, then just sit out. There's nothing wrong with that. So for example, I mean, just look at in here. It's just slow grind down, but just overall, it's just awful. So many, looks like it's gonna go and change, then it goes back down, and very similar here. So this is where you get killed as a trader a lot of times. So just be careful, because we could be just in store for more of that. All right, I think that's everything I wanted to go over here for the NASDAQ on the day trading front. I want to take a quick peek. I'm not going to spend too much time on the extracurriculars today, but I definitely wanted to take a quick peek at the dollar, because we were talking about being a little bullish on the dollar last week and looking for a move to the upside. And, well, look now what we have taking place here. Dollar making a move, pushing us back up. And now, again, look at these highs right here, right? Boom, boom. Mark it off. This is where we shifted the market, right? So we had it here. We had two, right? Here, shifted, broke, right? Came to the top, shifted again, right? So that being said, what can we do? Let's just mark off this new change. Boom. Okay. So I'm going to continue to stay bullish on the dollar as long as we stay over 101.75 thereabouts. Maybe it can go a little lower. Get a little wiggle room, but I think that's okay there to stay bullish. Watch out. Do have some more structure right here. Want to pay attention to that. We are running into some issues. So we're going to have to really see some acceptance back up and over here, right around 102.50. Yeah, we start seeing some daily closes back over 102.50, then I will continue to look for more upside here on the bulls. Maybe we come up into 103, I believe would be the next target, and over that 103.40 area, 45, maybe we hit the 50s. So let's see if we get some daily closes over 102.60, then we'll look for 103. But dollar is playing out and moving up higher as we were talking about. So that is interesting to see. And let's look at TNX and TLT here, because certainly have had some developments in TLT. I believe last video we were talking about, I was getting a little nervous thinking that we would start to come off on the yields, or not the yields, excuse me, the 20 and 30-year bonds here. And we definitely are seeing that. You can see the highs here right around this 105. I was thinking, if we held over 100, held over this 98, we could have considered that still bullish for the opportunity to break out. I think we said last one over 102. I was talking about maybe a 105 target for TLT. But this area really gave us that look above, fail, very nice, and down, 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 and it's just collapsing here pretty much. So, got to remain bearish on TLT. Look for higher yields on the TNX. As long as we stay under 96.65, it's going to be under 96. There's nothing here. I think we'll probably, as long as it stays under 96.65, I'm looking for 94.70 area on TLT. So look for that this week. We do have CPI again data, so we'll see how that all reacts to that. Let's take a look at TNX really quickly, as we just are talking about this relationship and the yields now starting to take off once again. As we had this level, I don't know, we had this level marked out here from last week. And yes, here we go. Okay, so boom, boom, boom. See, it really couldn't get below this 36 zone, right? And boom, 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 came back up. Here we are. Okay, so interesting spot here. I would have to say we probably will look for a bounce in TLT. I would have to say that it probably will bounce here, coming up into this big zone right here, seeing multiple reactions. Here, give us a little look above and fail, but let's see what happens. Right around, we're going to say 39, 80 to 40. So we start seeing a daily closes over. I'm going to throw out a new little area here. Yeah, over 40, but really over 40, 30 can start to look a little bit more. That's really going to shift the market for me. I mean, if you could really even say up here. So this is really the zone if we're going to be. There's no shift until that for me, actually. So trouble area here. Maybe the TLT does bounce. Maybe we come up a little bit. Maybe what happens is we come up, maybe hit this 40, mid 40s, 40, 40, 40, 35. That gives us the 94 on TLT. And then it bounces, and then this thing comes back down. That could be a scenario I could see playing out. For us. But I'm going to come in here. But as long as you can see here, structure was created. So, and then we broke it. So, really, as long as the yields here stay over 38, 38, 30. So even if it pulls back, anywhere into this zone, still remain bullish here on the yields. But it can pull back. Let's see if we get this. And then it tries. It's either going to double top or triple top, or it will, break through and we'll get. Or maybe it just pushes right through, and then we get the reject. There's a couple of paths there. Even if it rejects, it might even just hold this 39.80 area, and then head up to the danger zone in the 41. Could see that as well. So interesting developments here, though, in the bonds and yields. So let's pay attention to that. All right, really quickly, let's just fly through this. Nothing really going on in the Dow, but transports are coming down here. So a little bit of a divergence there. You don't really want to see that. That is a little bit of a. Oh, well, they were up, although the candle closed green, but keep an eye on the transports hanging out. Let's look at the yields. Is it still accelerating? Oh, calm down a little bit. That's encouraging, at least for the R word. I think that came down because of the jobs report. VIX 1 day, creeping back up. Not over 15 though, so nothing really too concerning there. All right, came down a little bit on how many stocks are trading over their 50-period moving average, but still over 75, still over 73. Nothing really, no worries here. Nothing that's scary. Breadth is fine. New highs versus new lows. Made a little uptick, but looking a little weak, but still over the zero line. Nothing really to be concerned with there. Oh. Okay. Well, I'm definitely going to note the bounce in market and the fact that we are, the HYG is heading down. I would say this is a bearish data point. because it's a bit of a divergence here. So that is interesting. Let's look at our VIX. Still in backwardation. VVIX, though, over 103, over 105. This looks like it's trying to set up for a move. Let's see. Over 119, 120. But volatility holding strong here. Nothing from the put-call ratio perspective. Take a look at VIX. Similar situation. Possible bull flag setting up. It's been having trouble with that 20 handle. But let's see. Hold over 1950, 1850. Ideally 19 if you're looking for more volatility. Over 20. Going to give us 22, maybe 23 again. So look for that. Plenty of room for it to move up. And these bonds probably are falling. Yeah. Interesting there. This getting over the 50 period moving average is not good. So I'd say this is a little bit bearish data point here with the ratio between the 7-year and the 30-year. So interesting. What will we get? All right, well, the picture here from the macro is starting to look a little bit interesting with now bonds selling off and the yields picking up again. CPI again Thursday, so let's see how they react. Markets balanced and waiting. Let's keep an eye. Of course, we've got the unfortunate geopolitical backdrop as well. So keep an eye on oil as it has been moving and can put pressure on tech with the higher oil. So let's pay attention to that dynamic as well. Although I think it might be a little bit less important just because the oil is really moving because of geopolitical more than anything. So, all right, that's all I've got for this video this week. Thanks so much for joining. If you haven't already subscribed and you like the video, please do so. Thumbs up. Let me know what you think. Higher, lower. Comment down below. Share the video. Like, retweet. Means a lot to me, all the support. And remember what we say for this week. At the end of all our prep, we've got our plans. We've got our trades planned out. We've got our levels. So let's trade our plan and plan our trades. Thank you again so much for viewing the video and spending some time with me to prepare for the market. This is what it takes. Love you guys, and I hope you have a great rest of the weekend. Take care. We'll see you out there on Monday.